Okay, it's been a while since we've seen something so drastic in the Malaysian stock market, which is a huge week, down 50+% in I think less than a week or maybe even a day, right?
Yeah.
Perak Transit used to be a stock that I looked at. I've bought the stock before, made a little bit of profit from the stock before, but decided to sell it maybe 3 years ago. It was a company that is located in Perak. The whole sales pitch for the company was essentially they were a student town, and Perak is a transit point between KL and Penang, and so there'll be a lot of footfall. Their bus stations will be able to command, a decent amount for the ad space. So that was one big revenue source as well. And it was always seen as a very stable, boring company. I've met the management before. I didn't have any bad things to say. But what is happening?
Yeah, so we're going to be covering what is really behind the 50% drop for Perak Transit. So just a little bit of context is this kind of like a steep fall is similar to the few precedents that have happened. So the first company is Cape EMS. This one also, they dropped because the major shareholder pledged their securities in a bank loan. That's why when they cannot pay, then the banks will force sell, and then that caused some sort of a margin sell call. Then there is also another two more companies which is a Rapid Synergy and YNH Property. So these two companies, it is related to the warehousing of their shares. So warehousing is actually not so good, is because they are kind of selling their shares purposely at a low price, and then they also are using loan. So that kind of triggered a margin call as well. So if you notice, Cape EMS, Rapid, and also YNH, they are all down 80 to 90%. So far, Perak Transit is down 50%. Yeah, it's not really a confirm that we know that the major shareholder or who got a margin call, but be a clear sign that who is the one that is disposing in the open market.
So, and then it's the drop that is so fast that one is the proof, right? That,
yes,
that
exactly.
Is margin related.
Correct. And also, who else owns the most shares, right, in this company?
That can move the price so much.
Yeah,
right?
So it's none other than the founder, which is the Datuk Sri Cheong Kong, and also his spouse, which is Datin Sri Lim So King. So you can see that they have multi of millions of shares has been disposed of in the open market. And then another telltale sign that says it's some sort of a margin call is because if you notice over here, there's this thing called the pledge securities account to Datuk Sri. Yeah, pledge meanings they are using their securities as a collateral for banks. And you can see over here another thing, which is they dispose these shares in the open market, which means it's not an off market. It's clear signs that they're getting forced sell over there. But what's interesting is that before the margin call, Datuk Sri actually sold a lot of his stakes. In fact, he actually sold about 50% way before the call, which is on the 22nd of October. So you can see over here, this is their annual report for financial year end 2024. Datuk Sri used to own about 180 million direct shares. And then Datin Sri used to own indirect shares of about 206 million. But that share count reduced up to 91 million for Datuk Sri Cheong Kong Fit over here. And then on the other hand, the indirect shares that is owned by Datin Sri, that one shrink to about 115 million. So there's already some sort of selling way beforehand. So yeah, that is our suspicious number one, why we feel is a little bit of tiny orange flag in this company. So this is the first one. And then the second one, which is the Perak Transit, the managing director has been actively trading their company shares during the sell-off. So during the disposal, he also he bought some, then sell some, then bought and sell and bought and sell. So yeah, he is actively some sort of buying at the bottom of the price during the huge sell-off. So what's interesting is that Dato' Eddie Ong Chu Ming, he also used to be a substantial shareholder. Previously, he owns about 7% or 7.969% to be specific. However, he ceased to be a substantial shareholder in April 2025. So this is also another key, I would say, major shareholder because he owns such a big share count in Perak Transit. So yeah, we don't know whether he got margin call because once he ceased to be substantial shareholder, he don't need to publicize his outstanding shares that he has, right? So I think the one that we can only see is in the next financial year end report. So if let's say the annual report for financial year 2025 is out, you can see whether the C still own maybe 4.9% or 3% or 2% stake in the company. So yeah, these 2 days when it got margin call, there's a big share that has been traded. Obviously, there's about 557 million shares traded. It was the top active, volume that is being traded in Bursa Malaysia in just 2 days. So yeah, it is like a big drama that is happening in this company that everybody is talking about. Now, you may be thinking that this company is quite decent because if you look at the revenue and also the earnings, it's growing steadily. Margin also has been like growing. So far, so good. But if you look at in terms of their cash flow, in terms of their debt, that debt is actually growing a lot. So they take in a lot of long-term debt. That's the key.
And I think the
one.
banks allow them to, because I think there's a perception that it's a company with pretty consistent business cash flows, even though it's that great, right?
Yeah, so free cash flow is negative, and then they also have been spending a lot of capex. That's also another thing. There's also another discussion that we had with our research team, which is the property that they've been purchasing, right? Or at least they are valuing their bus terminal at around like a 1 billion.
Wow.
For their Perak Transit, and also another terminal also is about 1 billion. However, why is it suspicious is because even though they own such a valuable asset, but that didn't really generate much of a rental income. So I think their measurement or like benchmark is they say if this kind of valuation, you need to make at least 20 to 40 million in rental income, which they didn't manage to.
Which is a 3-4% yield on the property, which is not like
it's not
great, but they still can't hit.
Yeah, so that is also another key thing that
it's an unproductive asset, basically.
Correct. And also another thing, which is they say that the ads that is placed inside the terminal, so they claim that there's a lot of like advertisers that is putting inside their thing. I think we also did visit. There are like advertisements going on, but the traffic, I think that's the key thing. It's not there. Yeah. So which means even though there's a lot of advertisement that is placed inside there, but probably the ad spend that the advertisers like put it inside, these transits or this terminal, right, is probably a very small amount of money. It's not a big because of the traffic. So yeah, that could be also another reason why their advertising income might not be so decent. So yeah, the final thoughts over here is that there's two key orange flag that could actually prompt you to avoid this company. So number one, which is the numbers. Free cash flow has been negative, and then they always use whatever they earn, and then they spend it on their capex, which is I think is their warehousing. Last time also they want to do warehouse or logistic related business. So essentially there's zero earnings that is being poured back to the shareholders. So the first one. The second one, which is share disposal. So the major shareholder already shaved half of his stake in a company before all of this happening. So that should be some sort of like a very orange flag or suspicious activity that is going on. But despite the fact, I think a lot of investors got attracted to this because share price is going up.
Well, and then also the valuation always looks quite cheap. Right?
It's like 15 times. 15 times price. It's okay, it's fair. But the key reason is because it's like going up. And then earnings also is going up. So that's why a lot of people chase. I mean, it's like a 3x company if you bought it since IPO, right? Yeah, so none of you guys will actually expect the 50% sell off, assuming you don't take the numbers and share disposal by major shareholders into account. So we also talk about this thing, which is the high quality company that we mentioned in our last webinar. So yeah, one of the key thing is that you need to know whether the numbers, does it justify the valuation? And also you need to know whether the quality of the business, whether is it sound or not. So we share a couple of examples over here already. Yeah, if you have joined the webinar, you could have known about whether Perak Transit, whether it is, high quality company or not. But for us personally, I think it is, not to say it's not the best. It's just like a very mediocre so-so business. So it doesn't really it's inside our high quality.
Well, the funny thing about PTRANS basically is that it's some form of monopoly because, buses and all that, you have to go through them pretty much if you want to go from central to the north. The problem is that it's a weak monopoly. Like technically it's a toll gate business, but there's a toll gate in the sky called air tickets, right? And people like to drive themselves. So really, it's only for people who, I don't like to say this, but it's for the M40 and below. And if you think from a business perspective, you will need a lot of people, a lot of them to use what you have in order to generate the kind of profits that you want, that is attractive, right? But if you go, like how many top schools are in Perak, they are for sure. But it's not enough, right? All the big universities are still here. I think even Johor might be bigger, Penang, right? But you don't get it as much in Perak. And we all know Perak, your hometown's in Perak, it's a very sleepy area, right? So no surprise when you visit the terminals, it's also quite sleepy. So all this like common sense approach to looking at the business and why it's not actually a bad business, it's just not a very efficient one. It's not one
the
where the
sec-
prospect is
yeah.
great.
Correct.
And it's just going to be there. If I own a company, I would do things differently. Obviously, I wouldn't do what they're doing. I would just keep it, much
As it is.
simpler. Yeah. So that is it's weird. It's like a monopoly that no one really, not to say no one really wants, but it's not a powerful monopoly. It's still a monopoly.
Yep, exactly.
It's like you want bus, it's like you have to go through that. That's about it.
Yeah. And last but not least is if you want to know what are the stakes of the major shareholders status, right? So you will know next year, April 2026. So that's where their financial year 2025 annual report will be out. All right. So that's about it for today's video. And here are some of our FIRL Pro's September performances. So far so good. I mean, our FIRL Pro Malaysia right now is still hovering around like 40%-ish. FIRL Pro Global also is kind of like stagnant around 20%. The boring portfolio dipped a little bit. Right now it's about like 10 to 11%. But just to share you guys, what are these companies that we have shared over here? They are essentially stocks that we have initiated in the portfolios. So KGB, I think this one is a known fact already that we have shared to the public. It is inside our, at least it's the number one stock in our FIRL Pro Malaysia portfolio. It is currently up about 4x, and since we initiated around like 2022 October. Food2 Holdings, this is also another company that managed to 2x. This one
Less than a year, right?
Yeah, less than a year. So this one we initiated during the Trump's Liberation Day, which is around April 2025. And since then, it has been 2x. And then last but not least is Velesto. This is also a company that we have talked about.
19 or 20 cents, right?
Yeah, around 18 cents,
Okay.
18.5 cents. This one we also initiated in the boring portfolio. So I mean, the reason why we initiated that is because we think that they are going to be a very decent dividend paying company in the future.
So this is a glimpse of what you can get in FIRL Pro. Basically, we try to look into the future and see what companies have great opportunity, and how we do that is to have write-ups to support the case for or against that company. That we do it for ourselves. Actually, a lot of these write-ups is for our own consumption, so we're just sharing with you our findings, and of course the decision is ultimately up to you whether or not you want to just read it, be a neutral, or make a decision. And we have a reference portfolio with some of these names inside for you to view. If you want to get a taste of what these write-ups look like, check out our free sample. Link in the comment section and description. See you in the next video. Bye-bye.